Welcome back to another roundtable. My name is Adam. With me once again, I have Rusmin.
Hello.
And Victor.
Hi everyone.
Thank you so much for joining us. And today we're going to talk about things that you should consider before you invest overseas.
Yep.
All right.
Yes.
So for us, we're based in Singapore. So when we talk about investing overseas, it usually means the US, China.
Yep.
Asia,
Hong Kong.
So stuff like that. So wherever you are in the world, you may want to invest overseas because your home market may not give you everything that you want in terms of growth or dividends or whatever it is. So you want to look overseas. All right. So I think we want to cover straight away. Why invest overseas? Just very quickly.
Yeah, so I think for when you invest in the overseas market, you will be exposed to a lot more opportunity versus what you can get in your home market. Unless your home market is US, obviously you're going to have a lot of opportunities there, right?
Yep.
So when I first started investing, I started off with Singapore, right? Because Warren Buffett always say, invest within your circle of competence, right? So your own backyard would be the best place to start. And that's how I actually got started. And but I actually, when I look back, I say, hey, I've been missing out a lot of stuff, right? So if I were to invest in the US with the time when I first started, I would have do a lot much better, right? So this is where there's a home biasness, for a lot of investors. So I know a lot of Malaysians also, they only invest within their own market, right? But then I always tell them that, hey, look beyond the shore, right? Sometimes you can look at Singapore. We have a very vibrant REITs market, right? And in the US, you have a lot of good monopolistic companies, your techs, right? And also in China is also another big market where you can also consider looking at, right? So primarily, you're going to get exposed to a lot of opportunities. Secondly, you're going to have diversification, right? So if I'm a Malaysian, I would want to have a better currency, right? In a way like Sing dollars or US dollars against my home currency. Yeah.
Okay. Yep. So so these are the reasons. Basically, there's opportunity, growth, exposure, and diversification. So these are the things that why you would consider investing overseas. And nowadays it's so easy to invest overseas. There's so many brokerages that offer low cost options for you to invest overseas compared to maybe say 10 years ago. It's a lot more expensive. So we're going to touch about that as well. But I think we can see why it's attractive to consider an overseas market. All right. But there are things that you need to consider as well before you just jump into another market that you may not be familiar with. So, so what are the things that you want to consider? So we're going to cover 5 of them. So the first thing that you want to consider before going to a market, what's the first thing?
I think it's the growth opportunity, right?
Okay.
Right. So you want to go into the market where they have very significant growth, right? They are able to expand either within the market, right, which is originally very big, like your US and your China or your Indonesia, where your population is like Indonesia about 200 million, your US is about 300 million, then your China is about 1 billion,
1.4, man.
1.4 billion. Oh, sorry, that's a big number. Okay, 1.4 billion in your China and all this. So even if those companies, right, they don't expand out of their countries, right, they still can grow very well within their own country. So expanding out of their own country, right, is a plus point for you, right? But because not any companies can expand out of their country, right? If you compare back to Singapore, a lot of the Singapore companies that are listed, they are only within Singapore, and our population is only, I think, 5.6 million, right? When they hit the saturation point, then that's where it becomes a dividend stock, right? There's not much of growth. It's very hard for Singapore to expand out because of the different cultures around, right? It's not homogeneous. It's unlike your China, your US or your Indonesia. It's just
one singular market,
and all speaks the same language, right? So it's very homogeneous and it can grow. So those are the opportunity that we want to go into, right?
And I still remember when I was looking at Starbucks, I was looking at the Malaysia Berjaya Food because they have the franchise for Starbucks in Malaysia, right? So and when I look beyond the shore, I look at the US, I say, hey, Starbucks is a main holding company, right? And they have franchise all over the world versus Berjaya Food where you only can sell Starbucks in Malaysia.
So why would you invest in Starbucks Malaysia compared to investing in Starbucks, right?
And the parent company has much better business model, right? They are they can franchise a Starbucks brand and they get, very good margin itself. Yeah. Sorry, Yoda.
All right. So basically you want to look for, like you said, markets that have a lot of potential for
big population,
homogeneous.
That means they speak one language,
All right. So it's easy for them to just expand and grow.
Correct.
And even for American companies, if they never even go global, it's like they're just huge in their own market. It's still a big market. But the thing is, for American companies, they tend to go global as well once they dominate the US market as well.
Correct. Yeah.
So that's the opportunity that you have with
very huge opportunity.
Huge opportunity. So that's the first thing you want to consider.
Yep.
What's the next thing that you want to look at?
I think the next thing I look at is the familiarity of the foreign market, right? You need to, I think, understand the inside out of the market, right? What are driving the markets, the what type of investors are inside the markets and all this, right?
Okay.
And to see which markets they favor what kind of sectors, right?
Okay.
Right. So like for instance, like Singapore market, people tends to go to the REITs. But for the US market, I think now used to be the growth trend, but right now I think
it goes between growth and value.
growth and value.
Basically, a lot of investors still go to the US because a lot of great companies here. But you're right, a lot of people who come to Singapore, they don't look for growth. They look for like the dividend stocks that we have because of our tax environment and all that. So you want to go to a market that gives you what you want. Yes. But also you need to be familiar because it's a foreign market.
Correct.
Like you said, you started with Singapore because that was your home.
Correct.
It's easy to start with that.
Yeah.
And if you go overseas, you may not understand exactly what the market's like. Or the business there are like how it's run and all that. You have limited information.
Yeah, and disclosure is also very different. I still remember I was looking at stock in Indonesia. They don't disclose the executive compensation. It's hidden, right? So unlike in Singapore, that you can actually disclose and see the CEO how much is he getting. Right? Yeah.
I think the thing is in the past probably it's very hard to get understanding of the let's say you were to look at this business in this like say US market, right? In the past probably is very hard for you to analyze, but with a lot of social media, a lot of reviews that's online on the products or the services, right? You can easily get a feel of how people think of the product, right? So the management can tell you the product can be this good, but when you go to look at the reviews, you look at what people say about them on the social media, you can get an idea whether the management is, trying to smoke you or what.
All right. So, there's a lot more information nowadays that you can just find online.
Yes,
you can go search for it. Compared to maybe 20 years ago, if you're going to invest in the US, like if you're somewhere else, it still will take a bit of effort to figure it out. So it's a lot easier nowadays to invest overseas because of the information, but you still don't know everything.
Correct.
Like for example, let's say like China is a great example.
Yeah.
We look at the big companies like Tencent, Alibaba.
Yes.
Yeah. And that's because we do have some experience with China. You've been to China
as well.
I've
been to China. Yeah.
So you kind of know what the landscape is like.
Correct,
and then you go like, everyone's using WeChat over there.
Correct.
We are also shopping on Taobao, right?
Yeah. So there's some familiar. And that's the thing about
regular Taobao.
So your new place is all Taobao.
Yeah, it's all most of them Taobao.
All right. So that's the great thing about US companies because even though it's US, US very global. All American companies.
Yeah.
We know American products and the brands and everything.
Correct.
So that helps with the understanding of that business.
Yep.
But if you don't, let's say Indonesia was a good one because you're familiar with Indonesia to some extent.
Yes.
But not enough for you to maybe invest there.
Yeah, because of the currency which we'll talk about later.
All right. So you need to be familiar with that foreign market as well and to be comfortable with that. All right. So what's the next thing that you have to consider?
I think the next thing you have to consider is the taxes and the transaction costs, right? So different markets they tax on different things. Like in the US, I think for foreigners like us, right, there's no capital gain tax if you invest in the US, but there's a dividend gain tax.
Dividend withholding tax, right?
Withholding tax,
30%.
Yeah, 30%, right? So if you go to the Hong Kong, right? Hong Kong market there's no tax on the dividend. But those head share there's China listed on Hong Kong, there's a 10% tax. So China there's a tax 10% withholding tax. Right?
Okay.
So in Singapore, I think Malaysia there's no tax on dividends and capital gain also.
Yeah, and also in the past, I think the brokerage transaction costs also can be quite high.
Yep.
For people, that's why I think it stops a lot of people from going overseas because you are looking at a very high commission rate.
Yeah, and with custodian fee also.
Yeah, that's right. Monthly custodian fee. That's what used to happen in Singapore as well.
Yeah, I think per counter is $2 a month.
Yeah.
Right. So imagine holding 10 counters. So you are paying all these unnecessary costs. Right. With all those emerging new brokers reached by a platform like Momo, Tigers, right, FSM1, right. This custodian fee is no longer there, and the transaction cost is actually a lot more lower. Okay, like IBKR, I just transact in the US is $1 commission.
Anyone can afford that. $1.
So that should no longer be your barrier
Yeah,
Correct.
And if
invest
you're
in
still
overseas.
stuck with,
Yeah.
I mean, something that's more expensive, you
Yeah.
may want to consider something else. But taxes, I
Yep.
think, are a big thing. A lot of people don't consider taxes actually, especially when it comes to, let's say you love dividends and you say, I want to invest in US dividend
Yep.
stocks because they have great dividend companies over there too.
Yes.
And you didn't realize there's a 30% tax. You might maybe if you receive $100 in dividends, it feels like nothing.
Yes.
If you build it up to $10,000 in dividends annually,
You can-
it's going to be $3,000 every year. It's
Yeah,
very,
and
very
also
expensive.
when you invest in the US, right? Even though you're a foreigner, there's also inheritance tax in the
Estate
event
tax.
of estate.
Yeah, estate tax.
Sorry, estate tax. Sorry.
Yeah.
In the event where you actually pass on, right?
Yeah.
And I think we did a very extensive video on that.
Yeah,
right?
go
So
check
you
out that
can-
one about US estate taxes
Yep.
if you invest in the US. So taxes is something you need to consider if you're going to a foreign market as well. What is the next thing that you look
I
at?
think the next one is the forex risk, right? So I think when we invest in countries, right, we need to invest in countries that are stable to your own home country.
currency.
Either they strengthen or they are maintained.
Okay.
Right. If they depreciate, that's a concern.
Okay.
Right. So
Yes.
so that's I think Rusmin going to share.
So
on
I
that.
think
Yeah.
I did a forex, comparison for base currency Sing dollars, right? Since we are based in Singapore, so I think if I look at the last 10 years, the US dollar actually strengthened against Sing dollar, right? About close to 10% over the last 10 years, and then followed by renminbi also strengthened, and Euro pretty much depreciated, but only slightly at a single digit. The worst performers are actually your Malaysian ringgit, your rupiah, and your rupee, right? And of course, yen recently also has been pretty weak, right? So, but if you look at the past 20 years mark, I think Sing dollar actually is pretty good currency. Okay, the only currency that is comparable with Sing dollar is actually renminbi, which hold up very, very well, right? And the worst performer are your rupee and rupiah, which depreciated by half.
Okay, that's a whole lot. So if you invested in those stocks,
Yep.
Yeah.
you would have lost half.
Yes.
In a way, if you
Yeah.
compare, you brought it back to your home
Yeah.
currency, right?
So you need to
Yes.
find a stock that can really quadruple, right? But of course, if you hold it for the last 20 years, your quadruple become only 2 times,
Yeah.
right?
Yeah.
After you taking into account of currency depreciation.
Yep.
Yeah, I mean US dollar also has depreciated, right? So by I think close to 20%, all right, and the Malaysian ringgit got depreciated by 30%. Right?
Alright.
So
Yeah.
that's why when I'm looking to invest into countries like Malaysia, I will usually invest into export-driven businesses. All right, so that's where when their home currencies are weak, it's a lot cheaper for them to export. Right,
Yeah.
so the business will bloom.
Yep.
Yeah.
And
will
usually export they are in US dollar.
Okay.
So but when they record in their financial statement is in ringgit.
Alright.
So they will record the gains in the forex, and that's where the share price and the profits will move in
Yeah.
tandem,
Okay.
right?
So that's
And-
one way to look at it. If
Yes,
you're going
correct.
to invest in a weak currency, go for an export-driven
Yes.
company.
And growth companies.
And
okay?
the growth,
You
that
wouldn't
one
want
is
to-
growing,
Yeah.
not just export.
Yeah,
Yeah.
you don't want dividend.
You don't want
Yeah.
dividend because
Okay.
you want to at least double, triple up your money in 3 to 5 years, so that at least you can.
So is it still
offset
worth
the-
it? I mean, for
Well,
the
well, I
forex
think
risk?
For most people, it's not worth it. Right?
Okay.
I mean, just go for those country with a very strong currency.
Okay.
Right? I think your downside is pretty much covered because you can go to those emerging country and then you pick the wrong stock. Oh no, you got losses
You
plus
get
your
So double whammy, right?
Double
Yep.
whammy.
Yeah.
Yeah.
But then if you do, there's a lot more consideration and analysis that goes into that because there's that
Yes.
risk of forex
Yeah.
losses. So you really have to pick a company that can overcome that and to make it worth your while.
Yes.
If not,
yeah.
there's no point.
Yeah, if
Yep.
not, you probably only invest in your home country. This is you're Indonesian, right? Watching this video, you only invest in Indonesia. It doesn't affect you, right? Because there's no
Yeah.
currency conversion there.
Yeah.
Yeah.
But then on the flip side, if you pick a strong currency to invest in,
Yes.
you get a double benefit.
Correct.
If
Yes,
you're from a country that, let's say Malaysia investing in Singapore
Yep.
Yeah.
or in the US even,
Yeah.
right?
Correct.
Yes, yeah.
Yeah.
So that's why I think forex risk is something that you need to really consider. So typically we pick into a more stable
yeah.
country, developed economy.
So you kind of, if you're
Yeah.
stable, you kind of remove that risk a little bit,
Uncertainties,
less uncertainty there.
Yeah.
All right. So the last one that we want to cover is
Your political and regulatory risk.
Okay.
Right? So I think when it comes to political risk, you also need to understand the country, right?
Yeah.
How stable it is and all this. So if we were to look, the country that's closer to Singapore is actually Malaysia, right?
Yep.
So for instance, actually Malaysia have a lot of good resources.
yeah.
And the issue with them is just that they are very politically unstable, right? They recently there's a change in government, and after that, then they flip off the change in government again and all this. Right?
Okay.
So all this political uncertainty, right, will cause like foreign investment to think, twice before invest into a country, right? So if there's not much of a foreign investment into a country, then the economy, right, may not do well, right? So over a long period. So that's the reason why when we tell people, if you invest in Malaysia, especially Singaporean, invest in Malaysia, you must make sure that the business is not only within Malaysia, must be outside of Malaysia, and there must be export countries, export business, right?
So there's the political side of things. What about regulatory risk?
I think when it comes to regulatory risk, I think China is the one that always come into the mind of every investor, right?
Yeah.
Because in the US, regulatory risk, they can fight the lawsuit for a long time. Right?
Yeah.
But for China, it's almost immediate, right? And that's why the share price just tank and all this, right? So I think that's the best example, right? So if you were to invest in China, right, you know that they always regulate the industry. Then you have to really buffer yourself when you invest in that country.
Yeah,
right?
EdTech is one a good example where they just kill off with a switch.
Yeah, that's
that's it. The whole industry wipe off
in one swipe.
Yes.
Yeah, and I mean, it's just, if you invested in those stocks, it's just really painful. There's no way back.
Correct.
Yeah, that's why portfolio diversification comes in, right?
All right.
Yeah. And also you must understand the why the Chinese government is doing that, right? So it's because of the value system. So you want to invest in companies that fulfill their value system. Then you won't have you may reduce the regulatory risk for the country.
So that's kind of why like the political risk and regulatory risk actually kind of like come together, because that's how China runs its country.
Yes,
that's the politics over there, and then it will extend into the regulations that they will have on to their companies.
Correct.
And you have to be comfortable with that risk.
Yes, correct.
And if you're not, then you just avoid it.
Yeah,
even
you
though
can just go to other country.
Yeah, because even though there are opportunities there, if you don't sleep well at night, you move on.
I mean, you got the two big market. You got the China and the US. If you want, you can just stay in the US. If you feel that you can take the risk, just go to China.
Yeah, but if you are someone who don't want to have any forex risk, of course, just stay within your home country. Then you know that you miss out a lot of opportunities out there.
Yeah, but I realized that investing is a very personal thing.
Yes.
It's really you
against you
and against you and how you invest, and if this is what works for you and this is what you want, you stick to that, because you don't have to follow Warren Buffett or ourselves or anyone out there, because it has to fit you. All right, so these are the 5 things that you have to consider before you invest overseas. You don't just want to jump because everyone's saying that this new market is sexy, there's a lot of growth there. You need to understand what you're getting into, and you have to be comfortable with those risks and the considerations as well. Right? All right. So again, if you're looking to invest overseas, we do have a table of brokerages in Singapore. So this is for Singaporean viewers because we're based in Singapore anyway. So if you're looking for a low-cost way, brokerages, low-cost brokers to invest in the US market, you can just download this table that we have, this list of brokers that we have. Basically, we list all the brokers that have access to the US exchanges, how much they charge, and which are the cheapest, and you can just basically pick what you think is best for you. So just go to fifthperson.com/invest overseas, and you can just download that list for free. Okay. So I think that's pretty much it for investing overseas, guys. Yeah. So I think we always look to. We're fans of investing overseas. I think there's a lot of opportunity out there, but you need to take into consideration, when you want to basically go overseas. All right. So once again, my name is Adam. That is Rusmin.
Thank you.
That is Victor.
Thank
you so much for joining us. If you like this roundtable, please hit the like button. Tell us you're doing a good job. Of course, any questions about investing overseas, ask them in the comment section, and subscribe to our channel. Many more roundtables coming up, and we'll see you around.